S&P 500 and NASDAQ hit all-time highs. Small caps are also approaching the 2-year highs. High-yield bonds nearing records, and they were able to close at new records on Friday basis. This is good for stocks. I'll explain why. And we'll look at gold and dollar relationship, as gold seems to be winning this battle and could break to new records. Additionally, we now finally have new yearly subscriptions. So if you haven't been able to sign up yet for the yearly subscription, or if you want to change your subscription plan from monthly to yearly, send me a message. All this and more in today's edition of MasterChartsTrading.com market recap for Friday, already Saturday, March 2nd, 2024. As always, please hit the like button, subscribe to this channel, share this video, ask any questions you like, and share your experiences in the comments section. This keeps this channel going. Thank you very much for this. If you are a subscriber, stay tuned. We'll have a quite a large section on members only video. We will cover natural gas, crude oil, Bitcoin, and euro, as well as market breadth in the members only analysis, as well as various ETFs, large cap stocks, as well as several of the small cap and what I call speculative securities, such as Victoria's Secret, Zoom, Beyond Meat, as well as gold miners. We'll finish off with that. So stay tuned. Very briefly, I will be using MasterChartsTrading.com price action indicators, which you can see on this chart. There's green, blue, red, and yellow lines. You can find out more about it by going to the description. Again, I wanted to announce that we now have yearly subscriptions, and they are significantly discounted to the monthly one. They're about 17% off. So sign up for that, and if you want to change your subscription, let me know as well. All right, so looking at S&P 500, Friday evening, we closed at new record highs. Obviously, very beautiful move. I'm still long myself, S&P 500 ETF SPY. I bought here back in October of last year for a very nice gain. It's now, my position is now up 21%. I did sell half of my position, so it's up 21% of half of the position. The previous part that I sold at about 13% profit. So overall, beautiful move. We're still expecting S&P 500 obviously is in an uptrend. Eventually, sometime in the future, I already showed you the weekly chart. I'm going to just briefly look at it again. And we're looking at a move eventually. Well, let's before that, let's just look at the recent move. But I'll get to the a larger sort of move that we're anticipating for S&P 500 sometime in the future. For now, we're just looking at this chart. This is S&P 500 on weekly time frame. So each candlestick is a week's worth of activity. One candlestick is one week each. So just look at this chart. This is the high from July 2023 where I'm hovering. This is the low from October 2023, and this is a high from December 2023. This is kind of like this upside down triangle. And then we have a breakout the week of 11th of December 2023. So the depth of this pattern from where as I just described, this upside down triangle is about 500 points or 12% or so. So we're currently already there. We have moved about 500 points away from the breakout that occurred in December of last year, and we're actually slightly even higher than that. So by and large, this is obviously target was achieved for this particular pattern. However, we're not stopping. It doesn't look like we're stopping. I kept thinking that we're going to stop. Like a few weeks ago, I pointed out this hanging man candlestick on the 12th of February, the week of 12th of February. It didn't really go anywhere. We made new high, and this week we made yet another new high and closed at all-time highs. So overall, this move, the tops are notoriously difficult to find. Bottoms are a little bit easier, but not as not nearly simple. But the tops are they just sometimes keep going. So what I'm seeing here is a very bullish market that people just keep jumping into it. One day it will become a little bit overextended. We can actually look at NASDAQ QQQ and see if it's already overextended. And I mean, it's not that overextended. It just doesn't look that overextended. So we can look at QQQ, the NASDAQ, on the daily chart as well. There's NASDAQ gapping, gap and run higher to new records. We are also long QQQ. I personally bought QQQ in March of 2023. I'm sorry, in January 2023. Alert for the subscribers came a little bit later in April, and obviously they're up very nicely as well, about 41% for this position. Where is this going? Eventually, this advance will become too steep, and it will become what's called parabolic and what's called, strongly overbought. But for now, we just keep going. Like, for example, NVIDIA, this is an actual alert as well on NVIDIA, and it kept going since alert was sent in February of last year, 23. It just keeps going. So how do we know it's the top? We don't. So we just need to, wait and see what happens. Another piece of good news for the stock bulls is this chart. This is IWM small caps. Let's look on the weekly chart of that. So there are small caps, IWM. And yesterday we closed and hit a highest level in almost 2 years. So small caps were, deeply, rather, they were under performing quite badly. But now they seem to be catching up. So small caps catching up, the more the participation there is, like for example, we have the large cap stocks, the mid caps, and the small caps, the better. Up till now, small caps were sort of underperforming and not participating as much. They did move off the lows in October, but they were actually 52-week lows, you have to understand. So that's how badly they were underperforming. Now, perhaps we're finally at the point where people are like, well, looks like small caps are also breaking out. Let's pour some money into small caps, all right? And so small caps, they haven't even yet made an all-time high. This is an all-time high that they made in November of 2021. And so we haven't yet even made a new high, all-time high, whereas S&P or QQQ is long time already at records. So the fact that small caps are making an effort, they're hitting almost 2-year highs, definitely 52-week highs, but almost a 2-year high is a great news, because we're seeing broader participation. And so yes, currently S&P 500 is overbought, overextended, new records. What if the small caps join the fray and actually this whole thing continues even higher? So we have to keep that in mind when we're trying to say that, maybe this is the top. I have no idea where the top is. And actually, if anybody knows where the top is, most likely they don't have a clue what they're talking about. There is no way to know this. So this keeps going, and we will just, keep the position open, and eventually it will roll over and we'll close the position. But for now, let's keep it open. Similar story is for high yield bonds. So up till recently, actual alert again on high yield bonds in October of 23, very nice move in our favor. So notice this consolidation that started in December, 27th of December of 2023, and it's basically here till now. And it's sort of this just kind of trading in this sideways manner, but in a very tight range. Notice that the range was basically bound by this green line and the previous highs. And what happened today, or rather yesterday, is that high yield bonds, this is high yield bonds on the weekly time frame. So notice this candlestick, okay, Notice this candlestick from this week, from Friday close. All right, so this is the highest close in over almost 2 years for for junk debt. So to me, this looks like this pattern that could be thought of as a maybe a triangle, maybe a pennant or a flag. So I mean, you can, I don't know, we can draw it in. I'm gonna draw it in. So we can say that maybe this pattern is like a flag, and looks like we're breaking out. So a breakout for this type of flag patterns, again, you know, usually we measure the depth of this pattern. So depth of this pattern is around 3%. If we make, you know, the similar type of move, then most likely we're looking at new all-time highs. Yes. So if we break, these are all-time highs marked by the white line, I believe. Let me see. Hold on a second. Actually, no, they're another one. They're closer. The all-time highs are closer. These are all-time highs, slightly even closer. So we're very close to all-time highs for high-yield bonds. Why do I care? I'm gonna get to in a second, but I just wanted you again to pay attention to this pattern that I highlighted. This could be a pennant or a flag pattern, and the depth of this pattern, just this pattern, is 3%, and we're looking at around 3% move, if I'm correct, and the breakout has indeed already occurred. So we will exceed the previous records, and this will imply that this divergence that I was referring to, where the S&P 500 has indeed made a new record, while junk debt has not yet made a new record, it's my mind, it was a bearish divergence. So at this point, if we do break to new records, then this divergence would be worked off, and we can continue higher. You see. So by and large, everything seems to pointing to higher prices for high yield for junk debt. I'm sorry. By and large, everything seems to be pointing to higher prices for stocks. My correlation coefficient isn't working right now, but what I was trying to say is basically high yield bonds and junk debt and S&P 500 correlate highly. They're doing the same thing. So if we see a high on both, it means that there's a confirmation. But if we don't see a high on both, the high yield bonds and the S&P 500, then there is not yet a confirmation. So what I'm waiting for is another, final confirmation for high yield bonds to make a new all-time high. We're waiting for that. For now, we're sitting in positions. S&P 500, we're sitting in those. So and NASDAQ as well. So let's wait and see for the next few days. Most likely this resolution would be to the upside, I think, for stocks. Okay, and now let's look briefly at the dollar and gold interplay. So we're looking right now at DXY on daily charts. So last week I pointed out that we can trade on daily charts. We can also trade on weekly charts. And when I say trade on daily charts, it means that we make a decision once a day. Let's say before the end of the day, we look at the chart and we say, okay, are we buying, selling, or doing nothing? So that's the daily trading. If we go to weekly trading, so we can look on the chart of dollar currency index, DXY. This is DXY. On weekly chart. So on weekly chart, we only make decision once a week. Okay, and I pointed this out last week where I showed my indicators and I showed the chart of dollar currency index on weekly chart, on a weekly time frame. This is 1 week. And notice that what happened, we have not yet broken out into a new bull market. If we closed above the blue support resistance line, right there where I'm hovering, it's currently at 104.4. At that point, we would say, okay, dollar currency index is now in an uptrend. It did happen on a daily time frame right there. Okay, it occurred right there on the 13th of February. It has not happened on Friday basis. And I pointed this out last week when I say, something is something needs to give. And I was looking at weekly charts, and it looks like dollar hasn't actually confirmed its uptrend yet. Notice the downtrend for dollar currency index was indeed confirmed when we closed below the red line here on the 18th of December, on the week of 18th of December. Before that, we had a whipsaw where we had a false signal right there on the week of 6th of November. But for now, we actually don't have a bullish signal yet. Okay, so even though on daily time frame we do have a bullish signal right there on the 13th of February, it hasn't yet occurred on the weekly time frame. So what happened this week is a sort of an important piece of the puzzle, is that this is gold, XAU divided by USD. Notice that the bottom part of this equation is USD. So if I was just showing you that the dollar was supposed to be getting bigger, but it's not. It looks like it's gonna get smaller. So dollar could get smaller. Okay. So the bottom part of this equation might be getting smaller in the near term, and dollars and gold is taking advantage of it. It rallied strongly. It rallied strongly today on Friday. This Friday. So for now, I am actually more and more inclined to trust gold. We actually closed at new all-time highs. We didn't, or rather, let me put it this way: we have closed at new closing highs. Okay, we have exceeded previous closing high, which occurred here on November 27th, I believe. Let me look if there was another closing high before that. No, so we actually have closed at a new closing highs. By definition, I mean this is good news for gold bulls. I am, technically speaking, a gold bull, although I don't really have a position in gold right this instant. But I was waiting for something of this nature, and it looks like dollar has not confirmed uptrend, while gold seems to be confirming an uptrend. So what I told my subscribers is that if we get any pullback for gold, even a small one, just like into this 2030 to 2020 area, I would consider buying it and for a breakout to new records. So we're looking at gold now more and more from the perspective of a bullish security. Let me know what you guys think. Otherwise, head over to masterchartstrading.com. Click on sign up. So once again, I now have yearly subscriptions. So for example, indicators on yearly subscription are only $24.95. They're $29.95 per month if you do the monthly ones. The indicators I'm referring to are, of course, these lines, this green, blue, red, and yellow line. They're available for this interface, tradingview.com. Tradingview.com interface is free. So once you sign up on tradingview.com, come back to my site, Master Chess Trading. Also look in the description section of this video, and the link will be there. Newsletter. So the newsletter, I send out daily alerts to my subscribers, as well as weekly members-only videos. So notice that we're going to be covering quite a bit of stocks, starting from various commodities such as Bitcoin, natural gas, crude oil, Forex, as well as we're going to cover market breadths this week, various ETFs, large cap stocks like Honeywell, Target, UnitedHealth, as well as more of a speculative securities such as DocuSign, Beyond Meat, as well as Victoria's Secret, which will be covered this week. And of course, the best deal is to get both trading indicators and newsletters, and they are $49.95 per month at yearly subscription, or $59.95 per month with monthly subscription. Clearly, a very good save if you get the monthly yearly subscription. All subscriptions come with free trial, so try it out. If you don't like it, cancel it. That's it for this week's recap. Again, thank you for watching all the way to the end. Please remember to hit the like button, subscribe to this channel, share this video, make a comment. Thank you for watching. Have another great trading week. Bye-bye.